It's more the market realization that we're going into a recession and inflation will still be too high for the Fed to print us out of it. And I think that is going to be a monumental freak out for investors. No, I agree 100%. I mean, you'll see a chart and it'll be coming into resistance and you're like, oh, well, that it should pull back here. And then the next day after it touches that level, there'll be some news that coordinates with it. And, that's the beauty of it. I always think it's good to know the news. Like I always want to be informed. But I oftentimes use the news as like, what are the masses thinking? What are the masses being brainwashed with? And then you can use it as a contrarian indicator where like if everyone's insanely bullish and everyone's pumping something, start looking at the short side, look for those resistance points and start thinking about selling into it or something like that. So it's definitely the beauty of the charts is that they do kind of guide you in the direction even before the news hits. It's a little too orderly for me, so I think this is just a little bit of bullish consolidation here. I'm expecting one more near-term move up. Minimum target would be the Terra Luna low here of around 25,500. So I think we get at least one more pop into that. There's a small chance you could get kind of a chasing rally that takes us up to this 28.5 to 30,000 level. The thought process there is you're seeing a lot of money run into technology stocks right now. The idea here is that money honestly is scared of Bitcoin and crypto right now because of Voyager, Celsius. People are a little gun shy, but they're pushing all of their money into stocks right now, into the equity markets. I think eventually when the equity markets start to stall out, you'll see some money rotate back into crypto. That'll give it its kind of final move up. But the bottom line is any way you cut it, whether Bill's comments are accurate. I think also you have to think about the fact that there's no way we've seen the full flush out here of a bottom in crypto in a bear market. I mean, go back to any of the previous bear markets. There wasn't the blood in the streets, as they say, that you've had in previous actual bottoms. In addition, I mean, you still got the measured move. You still have a calculated move from this distance here. And then if you take that same distance there, you got basically down to about 12,000 there. So I think you got at least one more big flush down, probably starts in September, October, kind of in that vicinity. Most likely when the equity markets start to flush as well, you'll get this risk off environment again to hit. It probably coincides. My guess is I don't think it's as much election based for me of Democrats or Republicans. It's more the market realization that we're going into a recession and inflation will still be too high for the Fed to print us out of it. And I think that is going to be a monumental freak out for investors. Well, guess what? The next recession, the Fed can't bail us out. And I think that realization is going to cause the next big market flush, and it's going to spread to crypto. So again, short-term, very short-term bullish, but midterm into year end, another big flush in the markets. No, so I actually do eventually think that they will be forced to, but they're going to try initially not to, right? So just because we're entering a recession, they're going to say, oh, unemployment's at 6% instead of 3%. No big deal. We can tolerate that, but because inflation is still too high. When the recession gets so bad that unemployment hits 10% or even 8 or 12, the Fed is then going to say, okay, inflation's at 4%, still elevated over 2%. But we've got to print our way out because it's getting too painful for Main Street, for average Joes, right? So I think initially the markets will panic. It'll get so bad the Fed eventually has to come to the rescue. Yeah, so I think for me, I like when things are kind of getting bashed. So like the Solana hack recently has me kind of keeping an eye on it. And on the chart, what's interesting about the chart is you got this tightening wedge pattern forming. And you're right at the low end of it. So basically, if you're looking to take a little bit of a trade, the trade here would just be to buy this low end of this support line. And if it were to close below or confirm below, you just exit for a small loss. So you have a very defined stop in that respect. Now, the upside would be is if you trade up here, you have resistance. So you have a nice distance. If you do like a risk reward assessment, which every trader should do on every trade, your reward is basically from here up to here. And your risk is really tiny. I mean, maybe down here, something like that. So that's a nice risk reward. And then the other side too would be that if you get up to here, maybe you leave half on the table to let it ride in case it breaks out. If you break out, you have some upside to maybe as high as $58. So again, it's always one of those things where when everyone's hating on something, that's where I'll start kind of taking a look at it. In this case, the chart's intriguing to me. I fully go into a trade like this saying, hey, listen, it may break below that line and I may just stop out, but at least the stop out would be a very small one versus the reward that I potentially would get if we start to see this thing start to roar higher. So I would say that's an interesting chart for me. Oh man, so I would just say in bear markets, everyone realizes that thought they were a genius in a bull market that they're not, right? So use that and improve yourself. So get educated, learn different techniques that you can. Everyone here on this panel has used different techniques to kind of give people insight, and I think that's the key is just get educated. I recently launched a 3-course trading, basically hardcore educational package. So if you want to check that out, check it out at verifiedinvestingcrypto.com. But get educated, people. It's so important.